Welcome to Shooting It Straight with Stan. I'm your host, Stan the Annuity Man, America's annuity agent, licensed in all 50 states. Today's topic is a very good one, and the title is Transfer Your Risk to Annuity Contractual Guarantees. This is very important in the current sales environment of most annuity bad chicken dinner, expensive steak dinner seminar sales pitches of hypothetical, theoretical, projected, back-tested unicorns chasing the butterflies stuff that's out there that you should never base your buying decision on. You should only base your decision on what an annuity will do, not what it might do. And the will do are the contractual guarantees of the policy, and policy equals contract. So you're going to get a policy/contract in the mail. So you should be making your decision solely on those contractual guarantees. But with that being said, annuities, plural, and there's many different types. Please don't say, I hate all annuities. Oh, there's an annuity. I'll never buy an annuity. That's like saying I'd never buy an automobile. I'd never go to a restaurant. I'd never buy clothes. I mean, that's just dumb. You already own one. It's called Social Security. Require minimum distributions on your IRA is, in my opinion, 2. If you have a pension, you own 3. So slow down there with the hate, okay? The facts are the facts. Social Security is the best inflation annuity on the planet. But in my world, which is the perfect annuity world that everyone, including the industry, should live in, annuities primarily solve for 4 things. The acronym is PIL. P stands for principal protection. I stands for income for life. L stands for legacy. And the last L stands for long-term care/confinement care. PILL, principal protection, income for life, legacy, long-term care/confinement care. Those are the 4 primary things that and goals that annuities solve for. That's what you're transferring your risk to. Okay? Notice there's no G for growth, no R for reasonable rate of return, or no M for market. No, if you want those things, do not buy an annuity of any type. Annuities that pitch those type of market, reasonable rate of return, see these back-tested numbers, all of them have limitations on the upside, okay? So be very, very careful. And even the variable annuity people are yelling at the screen right now. Variable annuities have limitations. What do you mean, Dan? How do variable annuities have limitations? I thought those are just mutual funds. Yes, they're called separate accounts. Me and you call them mutual funds, but you're limited with the choices within that specific variable annuity. So let's talk about transferring risk and contractual guarantees. There are 4 strategies right now in the annuity industry that are the primary strategies for lifetime income. And that's where most people think annuities should be used. Now, there are some ones for principal protection. There are some ones out there for legacy, meaning leaving money to your beneficiaries if you cannot qualify for life insurance and that underwriting. And then long-term care, we all know what that is. But the I in the PIL, PILL, is income for life. You're transferring the risk to the annuity company to pay as long as you are breathing, even if you're on a ventilator, okay? So as long as you're breathing, you have transferred that risk to the annuity company, the life insurance company that issues the annuities. By the way, life insurance companies issue annuities. For as long as you're breathing, you're transferring that risk. Now, the really smart people in the room with the ascots and those jackets, those tweed jackets with the elbow protectors on them, because they're all sitting around going, I really wonder what really the value. I mean, for those people, you're transferring the risk for lifetime income, but those smart people in the room call it longevity risk. You're transferring for longevity risk. What does that mean? Dan, I'm from Charlotte, North Carolina, where you're from, son. Translate longevity risk. What that means to you, player, is as long as you're breathing, regardless of how old you are, the annuity company's on the hook to pay. And that's the value proposition. So people always come back to me and go, what if I lived to 145? It's going to pay. How about if I lived to 157? It's going to pay. That's my Ernest T. Bass, Mayberry RFD, Mayberry RFD. That was a bad. I didn't like that show. Mayberry, the original Andy Griffith show, Ernest T. Bass. What if I lived in 197? It's going to pay. That's the benefit proposition of transferring risk for lifetime income, as long as you're breathing. Some people say, what's the ROI on that, Stan? I'm a player. I'm Gordon Gekko, son. I'm playing the markets. I need ROI. Well, I don't know that until you die. It's a transfer risk up until that point. So there's no ROI until you die. That should be a t-shirt that I sell, but don't have the energy to do that. Okay. You can also transfer risk for principal protection, multi-year guarantee annuities, or a CD principal protection product. Fixed index annuities are a CD principal protection product. What? Stan, that index annuities is a CD type product? Yes, it was put on the planet in 1995 to compete with CD returns. It is not a market product. It's not a security. Okay. So, regardless of the sales pitch you hear and all that upfront bonus, you get an upfront bonus with that. Upfront bonus in my world is called candy for the stupid. If you think there's a guy that's waking up a CEO of a XYZ company, annuity company, go, you know what? I think I'm going to give money away. I'm just going to flat out give it away. Give it away. Upfront bonus, because that's who we are at XYZ Annuity Company. That's what we're going to do. No, it's part of the overall contractual guarantee. And you have to look at the contractual guarantees, not putting any weight at all on the bonus. Sometimes it works out in your favor. A lot of times it does not. But what I want you to realize with annuities, and whether you need one or not, I always ask people two questions. What do you want the money to contractually do? And when do you want those contractual guarantees to start? From those two answers, we at theannuityman.com can determine if you even need an annuity. And if you do, which one of those types, and there's many different types, can provide the highest contractual guarantee for your specific situation. But when you, the basic raw 9-year-old, no offense to 9-year-old decision-making process is, I'm speaking for you, do I need to transfer risk to solve for principal protection, or to solve for income, lifetime income, like a pension income, or legacy to lead to the youngins, or long-term care, etc.? You remember that there's 3 phases of retirement: go, slow go, and no go. If you get to slow go and no go, you're going to need long-term care, confinement care type transfer of risk coverage. So that's how simple it is. Now, you could come back to me and you say, you know what, Stan? I don't need to transfer risk. I'm a baller. I don't need to do that. Okay, that's fine. Okay, but that's how you need to look at it. Do I need to transfer risk? Do I need to transfer risk to enhance my income floor? Do I need to transfer risk to protect myself from market downturns, etc.? MIGAs, indexed annuities for CD type returns in combination with CDs, in combination with treasuries, in combination with AAA munis, whatever you're doing to protect the principal and never lose a penny. And then legacy, if you cannot qualify for life insurance, which is the best legacy product on the planet, because that lump sum goes tax-free and probate-free to your beneficiaries. If you can't qualify for that, there are some guaranteed issue annuities that have death benefit guarantees on them. And then, of course, long-term care. So what are annuities? They're literally transfer of risk strategies. They're transfer of risk contracts. It's all about transferring risk. If you're not going into the annuity contract to transfer risk, don't buy it. If you're going into the annuity contract because I could get a good return, that chart that dude showed me at the steak dinner. No. Okay? You buy an annuity transfer risk. You buy the contractual guarantees. You shop all carriers for the highest contractual guarantee for your specific situation. So when you're thinking annuities, when you're getting pitched annuities, hopefully you go to my site at theannuityman.com. We'd love to have you as a client. We're only going to talk about contractual guarantees, and we're only going to ask you, what type of risk are you looking to transfer? It's really that simple. My name is Stan the Annuity Man. I am America's annuity agent. There's no arguing with that. And I'll see you next time.